Hello everyone, this is Carbonomics. Making specific price predictions in any financial market is a fool's game, and I'm not going to attempt to try. But we are going to go over the fundamental outlook for voluntary carbon markets in 2023, which is where I tend to focus my investment as this sector is not nearly as dependent as the compliance markets on any government to succeed. Now, the growth of the voluntary carbon markets and carbon credits, much like any other commodity, will be determined by the health of the global financial system. Which, as all major indicators point towards, will be in a continued recessionary contraction into 2023. Much of this caused by the ramifications of the disease that cannot be mentioned on YouTube that happened in 2020. But with a difficult winter, China reopening, the SPR being depleted, and several other bullish factors, oil's looking like it's primed for another leg higher in its bull run, at least over the next couple years or so. All commodities will likely see another resurgence as there is a lack of supply across the industry. But the short term, is questionable as a recession does tend to pull prices down, as this thread on Twitter rightly points out. So the future is, a bit up in the air right now, but either way, it doesn't bode particularly well for carbon credits in 2023, which have already collapsed or remained stagnant since the end of 2021 in pricing. Nature-based solutions, especially the REDD+ carbon offsets, have remained relatively resilient due to higher levels of demand. Given those projects don't just mitigate emissions, but they remove them from the atmosphere, via photosynthesis. Part of this can be due to how incredibly difficult, it is for the market to determine accurate pricing. Most transactions in the carbon markets are done over the counter, so information is difficult to find at best. Liquidity is tight and pricing transparency is severely lacking. With all this said, recession and price stagnation being likely, we'll also likely continue to see deals being made, new funds emerging, and the buying up of carbon credits or projects, even during this energy crisis, as we had in 2022. The market did actually manage to grow in value this year, even with all the economic concerns. And we saw the value of voluntary carbon markets double from 1 billion in 2021 to 2 billion in 2022. Even with liquidity drying up, it wouldn't surprise me at all to see the VCMs double in value again over the span of 2023. And the prudent asset managers in the space, they'll be acquiring the best carbon projects, and especially the oil giants who have actually been, continuously investing in new projects, especially carbon capture and storage, which I've been covering on this channel for the past couple of months. So just how much, have the carbon markets been growing? Well, they've had, nearly a 60% increase in value year over year from 2021, and nearly quadrupling in value from 2020. And given nearly, every company has 2030 or 2050 climate goals, with such a low valuation currently, the market would have to be in a really bad spot to not see, decent growth this year. And Ecosystem Marketplace, attributes the sudden increase in the growth of VCMs to the strides the world's been making in standardizing the industry, as well as increasing the transparency and quality of pricing and credits available, although this is still something that needs to be worked on. And that is something to look out for this year. We've already saw levels of regulation increasing rapidly, over the span of 2022. And I expect this trend to continue to accelerate as we move closer to 2030 climate goals. Every year continue to ramp up. And 2023 is really going to be incredibly impactful on the regulation front. We've seen many left-leaning governments across the world win elections, or maintain their power at this point. So they'll continue to bring more social and governmental pressure to fight climate change risks, as they're more likely to believe in it than some of the right-wing governments. And the Biden administration in the United States has been increasingly adamant about making progress on climate goals, particularly with the Inflation Reduction Act, new goals for the reduction of methane emissions, among other things. But the EPA, SEC, FTC, CFTC, any government body overseeing the financial or environmental sectors, has been exploring more regulations. Even global organizations like the World Bank and the IOSCO, all exploring ways to regulate greenwashing, climate disclosures, climate requirements, or carbon markets. And it is crucial to watch what North America and Europe are doing because this will likely impact the actions of the rest of the world. Besides a few deviant actors like Russia and China, of course, but China's still been making strides in renewable energy, EVs, and other sectors anyway. And this will certainly be another transformative year for carbon markets. But the question for us specifically is, will this transfer over to investment returns, and specifically in the public markets? And if we see the stock market collapse in general, as it is right now to some extent, then the carbon credit ETFs and royalty companies will likely fall with it. Although I would estimate the downside is relatively minimal for the royalty companies, as they have no debt and relatively high cash reserves. And the stock market functions, based on liquidity, as many of you will know. So, most stocks are not spared if the broader market is dropping. We'll also likely see, new publicly traded players emerge. The main possibilities being Zephyro Methane, which I've covered on the channel, and Vita Carbon, if I had to take a guess at two that we'll be listing this year. Zephyro is a carbon project developer, and Vita Carbon is a carbon credit royalty company. But what really determines if these are good investments or not is the long-term potential, not what's going to happen in the next year or the next 6 months. Depressed times like these are the best times to begin acquiring assets, in my view. And if you think fundamentals are disconnecting from the current market valuation, which is definitely the case in my mind anyway, the voluntary carbon markets will likely, 10 to 20x by 2030. So this definitely seems like, one of the better times to start looking to buy in my view. But that is not investment advice, of course. But in conclusion, in 2023, we'll likely see the prices of carbon credits decline. Equities will probably continue to stagnate, but the market cap value of the voluntary carbon markets will increase in value in all likelihood, in my view. But yeah, that's going to be the end of the video here. If you liked it, please remember to like, comment, and subscribe to the channel. Thanks for watching.